Good morning, this is Tim McGowan for the Finance News Network. US equities finished lower in Friday trading, ending near their worst levels. Stocks plummeted on Friday after Fed Reserve Chair Jerome Powell said in his Jackson Hole speech the central bank won't back off in its fight against rapid inflation. The Fed chair made it crystal clear that Americans will face slower economic growth and a weaker job market as a result of the central bank's efforts to tame inflation. But Powell argued that the failure to bring down prices would result in an even greater hurt for Americans. He called price stability the bedrock of our economy and said that the Fed must keep at it until the job is done, it being a series of meaty interest rate hikes. The Dow Jones Industrial Average dropped 3%, with losses accelerating into the close. The S&P 500 fell 3.37%, while the Nasdaq slid almost 4%. The stock market's worst month, September, will soon be upon us. The S&P 500 index has an average of a 1% loss in September, dating back to 1928, said Dow Jones market data. The Dow Jones Industrial Average has notched a similar September loss going back to 1896. It's clearly the bad month for both indexes. Last year, stocks fell almost 5% in September. The sell-off on Wall Street was broad-based, with just 5 stocks in the S&P 500 posting gains on Friday. Semis, home builders, retail apparel, asset managers, building products, trucking were amongst the notable underperformers. Defensive sectors, energy and utilities held up best but still ended up down. Once again, across the globe, rising energy prices are having a more detrimental impact on European investors than rising interest rates. Asia and Europe gas prices hit record highs again on Friday, driven by different factors, although with one common source: the continual ripples from the Russian invasion of Ukraine. Europe's benchmark gas prices have soared by almost a third in the past week as traders and utilities rush to secure supplies ahead of the winter. Asia's gains has been similar, around 31% year to date. In the UK, gas price rises combined with rising interest rates are hitting consumers hard. In addition, drought has been declared across the globe, from the Horn of Africa to China and England. As climate change continues unabated, drought means more than just a water shortage. It's having a major impact on electricity generation, shipping delays on the Rhine, with China on the verge of a water catastrophe. Water shortages could also induce a global food and industrial materials shortages on a far greater scale than those wrought by the COVID-19 pandemic and the war in Ukraine. Given China's overriding importance to the global economy, potential water-driven disruptions beginning in China would rapidly reverberate through food, energy and material markets around the world and create economic and political turbulence for years to come. Of course, unlike other commodities, water does not have a viable substitute. Today's global supply chains are woefully unprepared for a Chinese drought that could disrupt grain trade patterns and key industrial materials production across multiple continents. On the currency front, one Australian dollar fell close to 1 cent on Friday, buying 68.86 US cents. Bitcoin futures were off 5.5%. On the commodity front, iron ore futures are flat. Gold lost 1.2%. Silver was down 1.8%, and copper remained quite flat on the day. Oil prices ended higher on Friday, boosted by signals from Saudi Arabia that OPEC would cut output. On the futures front this morning, the SPI futures are pointing to a 1.5% fall. On the Australian June 30 reporting season wraps up from today through to Thursday. Watch for key results from Fortescue Metals Groups and Woodside Energy this week. This is Tim McGowan for Finance News Network. Have a good day.